Have you ever felt like everything in the world is moving fast, but somehow your wallet is moving slower? Welcome to today's deep dive on the United States economy, and you're watching the U.S. Report, where we break down complex numbers into real stories that actually matter to you, your family, and your future. In the next hour, we're going to uncover what's really happening behind the glossy headlines, why the stock market might look amazing, while everyday Americans feel the squeeze, and how recent decisions in Washington and Wall Street could change everything in the coming months. Before we get started, make sure to hit that like button and subscribe to the U.S. Report, because you don't want to miss any updates like this. Right now, GDP numbers are making the economy look like it's on fire. Reports show growth is steady, investments are happening, and businesses are reporting profits. But numbers can be misleading, and while the charts look great, the real story for most Americans is a little more complicated. Consumer spending is high, which is good, but inflation still sneaks in, meaning groceries, rent, and energy bills keep eating into the paycheck no matter how strong the economy looks on paper. Salaries are going up in certain sectors, but the increase is often not enough to fully cover the rising costs of living. The paradox is clear. America's economy is strong in numbers but stretched in reality. Let's start with money in your pocket. Personal incomes are rising slowly. That sounds good until you consider that everyday expenses are rising as well. The average American is still dealing with rent that keeps climbing, health insurance costs that feel like a second mortgage, and grocery bills that refuse to go down. Even though the economy is technically growing, the middle class is feeling the pinch, and many families are living paycheck to paycheck. This is not just numbers on a chart. This is real life, and it affects decisions about what families can buy, where they can live, and even what kind of future they can plan for. The Federal Reserve is a major player in this story. Interest rates are holding steady, meaning borrowing costs aren't dropping but aren't spiking either. Home loans, car loans, and credit card rates remain higher than many Americans would like, keeping large purchases on hold. The Fed's approach is cautious. They are trying to avoid overheating the economy, but also don't want to push it into a recession. This balancing act is something we at the U.S. Report watch closely because it directly impacts your money. If the Fed makes the wrong move, it could ripple through everything from housing to the stock market. Jobs are another critical piece of the puzzle. On paper, employment looks solid, but there are warning signs. Many companies, especially in tech, have slowed down hiring or are quietly freezing positions. The service sector still keeps the engine running, but growth in high-paying jobs is uneven. Americans still have jobs, but job security is feeling weaker than it used to. This uncertainty affects spending decisions. People are cautious, holding back on major expenses, and that caution can subtly slow economic growth. One of the most visible factors in the economy is the U.S. dollar. Recently, it has weakened slightly against other major currencies. A weaker dollar can help American exports become more competitive overseas, but it also makes imports more expensive. That affects everything from electronics to oil prices. For a country that imports a lot, this can mean paying more for everyday items. Currency strength or weakness might sound like an abstract topic, but it's something that directly touches every consumer's life. And the chain reaction from currency changes can impact inflation, spending, and even investment choices. Now, let's talk about Wall Street. Stock markets are hitting highs that make headlines and excite investors. Big tech companies are reporting record profits, AI investments are booming, and the market is enjoying a surge of optimism. But this doesn't always translate to everyday Americans seeing real benefits. The stock market is heavily weighted toward big companies and institutional investors, so while investors celebrate, ordinary Americans often watch from the sidelines. The divide between market growth and personal financial growth has never been more evident, and it's a crucial story we explore here on the U.S. Report. Inflation remains a silent character in this drama. Officially, it's under control, and price increases have slowed, but everyday costs continue to pressure families. Energy prices fluctuate, groceries remain costly, and healthcare expenses climb steadily. Even small increases in these essential categories can erode purchasing power, making Americans feel financially stretched despite positive economic reports. The tension between reported data and lived experience is a recurring theme in the current economy. Government spending and policy decisions also play a major role. Fiscal policies, stimulus decisions, and infrastructure investments are creating opportunities for some sectors while leaving others behind. Policies aimed at boosting certain industries may unintentionally widen economic gaps. Americans are feeling the results of these policies differently depending on where they live, what kind of work they do, and how heavily their budgets are impacted by inflation. The economic story is not uniform. It's a patchwork of successes and struggles, which makes understanding the full picture critical. Trade and international relations continue to shape the economy. Tariffs, trade agreements, and sanctions can ripple through domestic markets. For instance, restrictions on certain imports can increase costs for consumers, while export-friendly policies may benefit specific industries. Global economic shifts from China to Europe also affect U.S. companies and workers. The interconnectedness of global markets means that a change thousands of miles away can influence prices, jobs, and investment opportunities right here at home. Let's focus on consumer behavior. Americans are spending, but doing so cautiously. Big ticket items like cars and homes see more hesitation, while everyday purchases continue but are carefully considered. Credit card debt is high, which suggests people are relying on borrowing to maintain their lifestyles. This pattern has implications for economic stability. When consumers are cautious and borrowing more, it can slow down certain areas of growth while keeping other sectors active. Understanding these patterns is essential for anyone trying to grasp the economy as a whole. Housing is a key factor influencing both wealth and stress levels. While home prices have stabilized in many regions, affordability remains a challenge for new buyers. Mortgage rates are still higher than they were a few years ago, keeping many people out of the market or pushing them toward renting longer than they planned. The rental market is tight, and rents continue to climb in urban areas, making it difficult for families to save and invest in the future. This is a central part of the story for the middle class and young adults trying to establish financial independence. Energy and commodities continue to impact the economy. Oil, gas, and food prices fluctuate due to global events and domestic policies. Energy costs have a direct effect on transportation, manufacturing, and everyday household expenses. These changes can quickly influence consumer behavior and business decisions, creating a ripple effect throughout the economy. Americans are feeling these changes in their bills and their grocery carts, which is why energy policy and commodity markets are so closely watched here on the U.S. report. Technology and innovation are driving a separate part of the economy. AI, cloud computing, and green energy initiatives are creating high-paying jobs and investment opportunities. Companies investing in innovation see massive growth, stock market gains, and increased influence. However, this growth is concentrated in specific sectors, leaving traditional industries and workers in less dynamic fields feeling the pressure. The gap between tech-driven wealth and average household experience highlights the inequality within the current economic expansion. Healthcare costs remain a consistent challenge. Even with reforms and policy changes, Americans face rising insurance premiums, out-of-pocket expenses, and prescription drug costs. These increases impact how much disposable income people have, influencing spending, saving, and long-term planning. When healthcare costs rise faster than wages, the result is financial stress that affects the overall perception of the economy, no matter what GDP numbers show. The labor market is also undergoing subtle shifts. Part-time work, gig economy jobs, and contract positions are increasing even as unemployment remains low. And while this flexibility can benefit some workers, it often comes with less stability, fewer benefits, and more uncertainty. These changes shape consumer confidence, spending patterns, and ultimately the broader economy, which is why we track these trends closely here on the U.S. report. Financial markets are influenced by both domestic and international factors. Interest rates, trade policies, and political decisions ripple through stocks, bonds, and investment funds. While investors may celebrate gains, the benefits don't always trickle down evenly. Understanding market trends alongside real-life economic conditions provides a more complete picture of what guests happening and what might come next. Small businesses face unique challenges in this economic environment. Supply chain disruptions, labor shortages, and fluctuating costs affect their operations and growth potential. Small businesses are critical to the U.S. economy, providing jobs and driving local markets. And when these businesses struggle, it has a cascading effect, impacting local communities, employment, and overall economic confidence. Consumer confidence is a key indicator to watch. Surveys suggest Americans are cautiously optimistic. They continue to spend, but the memory of past recessions and rising costs influences behavior. Confidence levels impact everything from retail sales to housing markets, making it a vital metric in assessing economic health. Looking ahead, several factors will shape the next months. Federal Reserve decisions, inflation trends, global trade developments, and technological advances all interact to create a dynamic economic environment. For Americans, this means staying informed, planning carefully, and understanding that headline numbers may not tell the full story. Here at the U.S. Report, we aim to bring clarity to this complex landscape. From government policies to everyday consumer choices, from Wall Street trends to Main Street realities, we provide context so you can make informed decisions. The story of the U.S. economy isn't just about charts and numbers. It's about how these forces affect your life and your financial future. By now, you should have a much clearer picture of how the economy is functioning and what factors are influencing it. Remember, GDP growth and stock market highs are encouraging, but personal finances, inflation, and job stability are equally important. Keeping an eye on all these elements together gives you the best insight into what might come next. Before we wrap up, make sure to leave a comment below sharing your thoughts on today's economic update. Are you feeling the pinch of rising costs, or are you seeing signs of opportunity in your sector? Sharing your perspective helps build a community of viewers who understand and react to these trends together, because knowledge is power, and together we can stay ahead of the curve. Thank you for watching the U.S. Report, where we turn complex economic trends into stories that matter to you. Stay tuned for more updates, and we'll see you in the next video.